warm welcome to all of you, ladies and gentlemen. Tere tulemas, Sveiki. Thank you very much for your valuable time and being here on this busy evening. Today, we welcome you on behalf of Enlight Research, which is a northern star when you look at your investments. I'm Clavis Toscano. I'm an avid Enlight Research reader as well as an aspiring Enlight Research analyst. I will be your host today. And before we begin, I would like to introduce our founder and analyst of Enlight Research, Matthias. Thank you. Please.
Thank you, Clemens. So you can see at Enlight, we don't discriminate in any way. Look at Ian Clemens. Yeah, thanks for coming. I think we have a very interesting crowd. I mean, this is the first time Enlight arranges an event, so who knows what it will be? We'll see. But I think we have an interesting crowd. We have, for example, Estonia's Investor of the Year here tonight. Lev, congratulations. We have Latvia's investor Tomas here. And we will have soon the CEO of Orion Securities, Lithuanian brokerage firm. We also will have, I think if he's not here yet, the owner of this hotel. So a big mix of different people, I would say. And also, I think we will have some crypto entrepreneurs. And yeah, I shouldn't forget, we have a Finnish investment celebrity with over 7,000 followers. So if you wonder what he's doing, he would be tweeting live about the event. I think he asked, are you guys interested? And over 100 followers said, yes, tweet about this event. So that would be fun. And last but not least, we have students in here. And I really mean not least, because, when your classmates are YouTubing and TikTok dancing, you're sitting here learning about WAC and ROB. And I think that's really shows passion to learn investing. So yeah, impressive. Now let's start the show. And the first presenter is?
So we have Arvydas Jacikevičius. Please forgive me if I have pronounced the family name not properly. The fund manager of Artea Baltic Fund. He will tell us what drives the Baltic market now and what stocks he finds most interesting. So please pay attention, please.
Hello, everyone. It's feeling to be here on stage. Thank you, Matthias, for inviting me. My presentation will be quite short, so I'll start it right now and hope it will go smoothly and as rapidly as could be. Nobody likes to read in disclaimers and me again. So, the first thing where I want to stop is mention the performance failure. Unfortunately, it will start pretty much soon. So since 1st of January, the citizens which had to participate in this so-called P2 pension scheme will be able to cancel their agreements and to give away the money. This window will be open for 2 years. And in the April, this is just the message for the investors and for the sellers that in April probably some first money will reach the local capital markets as the first money will be released from the pension accounts of those who will be willing to cancel. all in all, you can see the figures. Currently, our pension system has almost 10 billion euros, average saving 6.6 thousand euros. So, but this is because the active account is less than 1 billion. So basically, active account average is much bigger. What is our estimation taking into account the Estonian example? Sad example, so to say, that 30 to 40% cash or investments will be withdrawn, and 50 to 60 of those amounts will be consumed. So we made a quick math what it could be the effect for the Baltic capital markets. So this lands to 1 to 5% of withdrawn cash, which is after all the taxes and etc. Would make from 20 to 100 million euros to the local equities and bond market. Is it big amount or not? Or is it could be a reliable number? Of course not. It's a very wild guess. When I was expecting about Enlight, I was telling that some probably 30 to 40 million would reach the Baltic market, but it came so that white swan landed in the market, and the Norwegian pension fund invested Enlight cash. They got not only this, but increased double investment into Baltics. They invested into Ignitis Group shares. So, but locals as well, they are investing. What are alternatives currently, as we see, as the asset manager, as the bank group, which could be chosen for those who will not be willing to consume, but will be willing to take away money, but to invest further. So it will be third pillar with pension funds, global securities, ETFs, indexes, and local equities and bonds, as I said, from 20 to 120 million euros. Second story, which is very interesting now, it's about Ignitis. Will it be buyout by the state or nationalized, so to say? So the quick answer, we think that currently the probability is extremely low, because we have the comments from the Prime Minister, from the Minister of Finance, and finally from the team of the President himself, that this act lacks of arguments and lacks of money. They want to put all the money state has to defense at first, and then to the wages of teachers and healthcare sector, etc. So the probability is very low, but the saga continues. Ignitis is listed already almost 5 years, and from time to time it appears some talks about the margins, about the management, about the strategic projects, about the tariffs, about the social role, which could be probably more important than profit seeking. So the saga will continue, and the key point to look in the very nearest future is the term of the current supervisory board ends at 25th of October. So before that, the new meeting probably should be announced, and new candidates also should be announced. So let's follow how it will develop. So I'm sure that the saga will continue, but nevertheless, since the beginning of 2022, this is the graph. So comparing Ignitis shares performance with Baltic index, we can see the quite a nice performance, and all those bad things which happened in the very first year of after IPO, when global investors sold the GDRs and London, the price suffered the losses. So my personal bet is that the good story for the stock shall continue, and there shall be no buyout by the state of the private stocks. Now, what stories others could be interesting for investors? This is more for retail investors or for those who are looking not to growth but to yield. So this is the dividend story. As you can see, we have this year average dividend of those selected companies. This is only those selected companies. Average is 5.8, and I market Estonian companies in this graph. So you can see quite a good spread between Lithuanian and Estonian companies. Unfortunately, no, didn't put any Latvian, probably 11 could be there, or Delfin Group. But still, you can see that on the top notch are those companies which are very stable dividend payers and paid the dividends similar or even better. This year, for example, like we have here our bank and AEI Energies, they increased dividends significantly in 2025, and current 6 months results show that the results are good, and this dividend policy could be continued in the future. And the right call is Akola Group. They probably will report their dividend proposal in 3 weeks' time. And that's also it will be according to dividend policy, which means that they will land somewhere here. This dark blue column should be like 4% dividend yield according to current market price. What else? Matthias asked me to show what you like at current stage. So I pretty much like food sector myself, because everybody eats every day. And on the other hand, we have very good traditions and very good conditions for professionals to be successful in this sector. So I marked 3 companies there. So Ignitis Group, and Akola Group, which I think those are most important in this food sector, which is listed on food sector companies which are listed in the Baltic exchanges. Currently, as you can see from the valuation side, it's extremely attractive. The performance compared to benchmark index, the benchmark index in this graph is dark blue line. Is all those are performing much better if we take into account last 1 year and 9 months almost. And they have very good growth stories, both organic growth and also growth their investments, own investments and investments into other companies. So my feeling that this growth shall continue. I like companies pretty much. For example, Akola Group, you can check in our public fact sheet, which is published on the internet each month. So Akola Group is #1, our pick in the Baltic fund currently, and it's performing as well nicely. And so this is our top pick at the moment. Of course, there are plenty of risks related. Those are marked there. I probably don't read those, but as every investment, every company faces with the risks. And the major risk we see is that food sector companies are pretty much cyclical. But if the company works not in one segment, but in separate segments, then those cycles may differ. That's good for the investor and the company. And the low liquidity. About the low liquidity, it's very important to say about the low liquidity. My personal feeling that when the prices were of the stock relatively lower than they are now. The liquidity was low, but still the price started to increase. Then the liquidity started to increase as well. The very good example is Vilnius Group stocks, and also Akola Group also in the past few weeks started to go the same story. The stock is going up and the liquidity also starting to increase. And the last slide from me, it's again a very different story for those who like not the growth, not the cyclicity, not the aggressiveness. Then you can choose the already dividend story right now. I marked the column in that yellow gold about the dividend yield. You can see that all those 4 companies are yielding 5% or more. This is from as of taking into account the market price of 2 days ago and the dividend payments which were made this year. So nothing specific to say about those companies. One of it will present today, so you'll be able to listen to their story and to ask the questions. But when we land to the risks, so it's always the major risk is investors like to call it value trap when the stock is trapped in the low valuation zone. Maybe in our region it's more related not as classical value trap, but it's related to the geopolitical situation. We see the situation that we have war neighborhood, and we see foreign investors which are treating us almost a war zone, very close to it. So that's why the foreign investors stepped aside in the past several years, and nothing lasts forever. The situation will change, and we'll see other relations in the future. Okay. I feel that. So that was all from me. So Matthias, you can do your job.
Any questions for Arvid? Can I listen on? Is there any Estonian stock that you would not buy or even sell today?
Yeah, very simple question. It's Silvano Fashion Group, which lies for me as a void right now. Probably no reasons to comment. And on the other side, we are still sticking to the value models. So some Estonian companies at the current stage look quite expensive. That's why we are not invested or recently sold out.
So Arvydas, thank you very much. And each presenter will get a present and it's a book. And I asked ChatGPT to recommend a book which is not business side. So this is the book for you, Arvydas. The Nightingale by Kristin Hanna.
Okay, thank you. Yes,
about 2 sisters in the second World War.
And I'm sorry, I'm not very short, but at the hoc I'm reviewing this table on my LinkedIn profile. So if you will follow, you can get those data. This is always reviewed some multiples and statistics for the most liquid Baltic stocks. Thank you.
Right. So.
Thank you, Arvydas, for this enlightening research that you have presented on behalf of us. And that shows that a lot of times we say that the true happiness lies within, and we try to find it outside. A lot of times we also see that we have very good opportunities at home in the Baltic, but we try to go quite outside in the NASDAQ or other Asian markets, but we can see that there's still action ahead in the Baltic market. So stay invested. We have now the next speaker, who is just newly appointed CFO of Artea Bankas, Mr. Tomas Varenbergas. Please welcome him.
So, thank you for introduction. I'm Tomas Varenbergas from Artea Bank, and today happy to discuss Artea Bank investment story. We'll try to, as much as possible, to benchmark our bank to Estonian and Latvia bank. But yeah, it's highly focused on how we take this story and why we are attractive investment opportunity.
So 1 second.
So yeah, here we go. We are coming with new energy. It's no more Artea Bankas. It's no more a period, then we can't translate the bank's name. So we are now Artea Bank, and yeah, we have kind of the 4 key arguments which explains our equity story. So the first thing is that we're undergoing our strategic transformation. And rebranding is one of them. So it will enable us to jump to the next stage of the bank's development. The next thing is that we are highly investing in our IT, and it will unlock another growth opportunity, especially with retail clients in the country. And the country itself is doing very well. Lithuania is one of the fastest growing country in the EU, and there are a number of factors why going forward we will keep that pace going forward. We are paying out high returns for our investors. We committed that. We increased our commitment during the last 12 months, and we're going to do that because we believe that it's not enough to earn high profit, but it's very important to share these profits with the shareholders. And a fourth thing that, well, you're trading at unjustified valuation. So before going into more kind of analytical or arguments, so just to remind who is kind of seeing us for the first time. So we have more than 30 years operating bank in the country in Lithuania. We started as a corporate banking, but currently we are a universal bank in Lithuania. We offer full offering of the services, including a leading capital markets franchise in the country. Even some of our originated products are being offered to all Estonian clients. We have asset management, private banking, life insurance, renovation. It's a unique our product that we have developed in the country, all solar type new apartment buildings that we have also in Italy or Estonia. Almost all of them in Lithuania are being renovated by us. So we highly participate also on ESG topic. It's very important these days. We are trading on ticker ROE. Again, another soft but important thing that you're highly focused on delivering returns for our investor. We have 5 billion assets bank supervised by ECB, so corporate governance standards or similar things is not much. We have a good and proven track record. We managed to grow very fast, but what was important that our profitability was also delivered. Our growth philosophy is twofold, I would say. We are focused on organic growth, but on the same side, we are looking for M&A opportunities to support our organic growth. And during the last 12 years, there was 4 important transactions that boosted our growth. There were different types of portfolios acquisition, stress bank acquisition, investment bank acquisition, so different types, but we always keep our eyes open. And in case the opportunities that comes to us, we think that it's valuable or value creation for the shareholders, so we will go into that. And looking to the timeline, you see that every 2 or 4 or 5 years something happens. So already 2 years passed, so we are approaching some important milestone. We have a strong shareholders behind us, so it's very important that these shareholders commits also to our strategic transformation. So on that left side of the pie chart, we have local Lithuanian strong companies. It's Valda, Wilgrow, and Estonia. They are very well supported by a reputable financial institution, EBRD. And what is good that, you know, founders that started back more than 30 years ago, they're still in our cap table. And what is interesting that we are even increasing the stake in the company, despite that we already for a couple or more years not actively on the management board or other roles in the organization. And the left side is very well supported by the right side. So we have plenty of institutional retail investors. We are very proud that Estonian retail investors finds out us as an attractive investment opportunity. So look, more than Estonians, there are more Estonians compared to Lithuanians. Looking to the banking market, so we put Lithuanian and Estonian, so there is some similarities, but there are differences. So let's start looking on the Estonian side. Well, SEB and Swedbank. So the market is dominated by 2 players. Here we have, looking on the left side, the same situation in Lithuania. SEB and Swedbank dominates, having 50% market share. They are not willing to grow that market share, so we are good enough. We are managing the risk, we're earning massive returns. All is fine. What is on the left side? I love to look into Estonian banking structure, but you do have 2 challengers. So it's LHV and some point Cookbag. By looking into the Lithuanian market, the challenger position, I would say, is empty, but that's what you're trying. That's the place that you're trying to take. So this thing about us as LHV kind of 3 or 4 years ago. Still, Luminor is larger bank in Lithuania compared to us, but they are losing market share. So you know how you're doing in Estonia. Nothing else to that, what we are doing in Lithuania. On the macro side, I said Lithuania is doing very well. So on the right side, we see our previous, current, and forecasted growth rates. What is important is on the left side, Lithuania economy is the size of Latvia plus Estonia. They're double as economy as Estonia. The economy itself is more diversified and less risky to some external turbulences that could come and usually comes on a cycle. Looking to the balance sheets or P&L, so interested to look into the LHV Group bank there. I have nothing against LHV Group, they are good banks, but worth to see and worth to compare how do we look at the 3 banks that are listed in the Baltics. They're more or less similar structures. We do have a more diversified loan book compared to LHV Bank. And our revenue mix also is more diversified. We do have a high portion of net fee and commission income and other revenues, such as coming from life insurance or trading or other business segments. As said, payouts matters. We put a high universe of possible investments in the Baltic, coming from the Baltics, including fixed income, bonds opportunities. Artea payouts stand out. You can think about, kind of a fixed income return plus possible price appreciation. And as I said, well, the management fully committed to the high returns. They're going to do that. They're going to pay out dividends. They're going to do buybacks. It's put in the stone, I would say. On the valuation side, we put more difficult graph here, but look, the whole idea is that we do have the price to earnings ratio and the yield. We have here not only the banking sector, but also other companies listed in the Baltics. If, I guess market cap above 150 million euros. The best position to be in this graph is on the right-hand side and to be on top. Well, we are here. What awaits us in the near future? The returns, they're good. MSCI, Emerging Europe, Exertion Index, they're doing very well. Our stock was doing very well. So what lies ahead? So we do see 6 key triggers that will push our stock higher. So the first one that I already explained is macro growth or standing situation. And by including the pension reform, so what was the party, I guess, in 2021 Estonia. Of course, it's after that we will have hangover, but look, at least for 2 years, we're gonna live very good. We have Lithuanian ISA, investment services account, so a new thing. You already had that for a while. We have it from the beginning of the year. So that's gonna drive, and we need to see that it's retail investment culture is developing in the country. As said, rebranding, stronger brand, it's easier to communicate to investors. It's easier to explain our ambition to be a challenger in the country. Previously, we are Šileika Bankas, so Šileika, just to remind who doesn't know that, is the 4th largest city in the country. So then you want to be a national champion. It's pretty hard to bank our services in Vilnius. When you come to the Vilnius, to a younger client base, you say, look, we are Šileika Bankas, maybe one of our credit card. Just imagine that, I guess in Estonia, Parma is a 4th largest city. So the Parma bank would try, to be a national champion in the country. It's a little bit about it. Makes it quite difficult. So we need to see that the new brand we can achieve and boost our growth story for buybacks. We benchmark ourselves. Well, LHV is outstanding valuation by the bank, but we benchmark ourselves to CEU banks universe. So it's Czech Republic, Romania, Slovakia, Poland in some terms, and they're trading at least 35% at higher levels. So we do see that the buybacks could help us, and we already, as it's already a tested instrument by ourselves, and we see that it works. We tested, and we got to continue that. And again, valuation, so it's by itself. So to end my presentation, well, we're undergoing strategic transformation. So it's a little bit painful for the investors to see a slightly lower returns for a while, but we openly say that. But these investments will bolster our growth and returns for the shareholders. So if you're looking for a kind of a cheap investment opportunity with a high potential returns for investors, if lying ahead price appreciation, so here we go. Thank you. It's very hard to calculate them because there's not much of them, and as we have 20,000 of investors, so we need to know the big line by line and to guess either Olex is from Latvia or Estonia, but it's not much. But we do see a high potential there, so we do see a high potential. So that's why we're going to the Latvia also to speak to the retail investors. It's matter of time. It's a matter of time when they will try to catch up, the investment culture that is in Estonia. But in Lithuania, even in Lithuania, so it's also what we are kind of doing now. So we're trying to build a retail investment culture, as we do see what's happening here in Estonia. So what is the size here and what is the size in Lithuania? So it's a massive difference.
Okay, two boring analyst questions. Will you reach your full year guidance, 65 million? And the second one is, when will the new buyback program be launched?
Both questions are very difficult. But we set ambitious goals. And we reiterate our guidance. So do not kind of give up in the middle of or in the course of the year. So our ambition is still to achieve close to that level. And on buybacks, so we want to believe that it's more matter of the weeks rather than months.
Interesting. Okay, thank you. And we hope ChatGPT recommended you is never let you go.
Thank you very much, Tomas. Achu. The next speaker we have is Mažvydas Šileika, the CFO of Akola Group, one of the biggest ready-to-eat food producers in Europe. Please welcome.
Hello everyone, pleasure to be here. Matthias, congratulations on a very fine event. And you were right that some drinks will attract more people. I took myself once. So thank you for having me. This is still Artea and this is us. So my name is Mažvydas and I come from Akola Group. More than 5 years with the group and now I'm the CFO and board member. And I will tell you a bit more about Akola and what we do and how we position ourselves. When I was thinking, what my presentation would lack in the morning, and when I saw Arvydas' presentation, understand that exactly Arvydas pitch for us. It was very nice. Doesn't come very often from Lithuanian to Lithuanian. So Akola Group, we are a group based in the Baltics. And we manage 59 companies. So we are quite a big organization. What we do, we basically, we are an integrated food and agri group, and we do everything from planting the crop to delivering the final product on your shelf in the supermarket. If you want to make it even more simpler, I usually say to the investors, look, the population in the world is growing, and we are here to feed it. So we are providing everything from the primary food to the last product on the shelf which you buy. Recently, with the war in Ukraine and all the geopolitical instability, another topic is very relevant to us, is food security. So Europe has to be self-sufficient in food. So we need to have enough food to be independent and self-sustainable. So we are also in the trend, to provide food for European markets. even though you can see that we are pretty much based in the Baltics, but around 70 to 80% of our sales is export. So we basically sell to European countries and all over the world. We are quite a big group. We have almost 5,500 people, and we divide our group into 4 segments. Partners for farmers is everything what's connected with farming. So we supply the farmers. We buy from the farmers grains. We sell them agri machinery, and everything what they need to do their farming activity. Farming, as I said, we are initial farmers ourselves. So we do crops, we plant grain, we do milk, we have cows, 3,600 of them. So we are initial farmers. And then food production. This segment actually got the most attraction. So this is where we have poultry and we have other foods where we bring brands and food products, to your table. And we were discussing with the interested investors previously. Unfortunately, we don't have that many Estonian brands, but hopefully some of them you can see in the shelves in the supermarkets. But we do Activus porridges. We have Sanyan noodles. Then we have brands more known to the farmers like Sagro and our farming companies. But then a lot of presence in the poultry area where we have Akola Foods in Latvia, and Vilnius Paukštinas in Lithuania. Unfortunately, it's hard to sell poultry in Estonia. You have your own very good producers, and it's a bit far away from us. But we will get there at some point in time. How the group looks, we just closed our financial year, and very rightly said, all the dividend yields which you saw previously, they are last year. So it's not renewed. We will announce our profit distribution in roughly 3 weeks. So that will be renewed, and better compared to other players. Our financial year ends in June, and so we work from July to June. So we're a bit a different animal here, and it's hard compared to us. But basically what happened last year, it's the second best year in our history. So we managed basically to hit the target quite high. So we managed to turn 1.6 billion euros in turnover, and 73% came from working with farmers and trading commodities. But already 29%, meaning a third of that, came from consumer goods, food which is brought into the shelves and which is much more profitable. In terms of EBITDA and net profit, so we have a 51% uptick in the EBITDA for this year, and almost 2.5 times in our net profit. So this is basically our earnings capacity which we can bring into the market and for the investors. So how do we look? Roughly our share price, it went up, then it went down again today, but we are basically 1.56, 1.57. So Matthias says it should cost at least 1.8. So it's basically a very simple 14% nice return for you. So there said 9%, here's 14%. Swedbank, our long-term partner, it also looks at around 1.8. So we are, slightly still undervalued, but when you look at relative numbers like PE, what the same what Arvydas showed, it's 4.1, 4.2 at this moment. Historically, we traded at 9-ish. So it's still a very big lag between our earnings and our market capitalization. We're also very focused on return on capital because we use massive loads of working capital to trade, and the return on capital, is how much we can earn from that capital, because it's better than maybe to put a time deposit and have some nice interest. So 11.1 is really good. Our target is at least 13. So we are getting there. We're not yet in the same area we would like to be. So how we performed against the market, I probably took a bit different index. We're still below a bit the Baltic index, but one thing, what I can tell you is that we try to balance with the dividends, but we are a growth story. And the growth story, we do both organic and M&A. Since, I joined even below the 0.8. I joined around 0.7, so we already have a twofold increase in basically 5 years. And we have a very precise strategy what we want to do in the market, and I will show you later on what we did as well. How do we call this graph? Yes, we have some volatility in our earnings. If you follow us historically, we go up and down, but I can call this graph higher heights. For us, it's important to know the direction that we move up, even though we have some upticks, but we, in the end of the day, go over higher heights here. We still keep increasing the stock price for the shareholders. How we developed? So, from 21, 22, we had crazy years where, all the prices inflated and we had higher returns. Then we went a bit down to 1.6 billion a year ago, and we closed now 5, and now we close 1.6. But the basic story here is that we invested a lot in food, which is higher value added, higher profits, more stability and less volatility. So going from 18% to 28%, that's a big change for us for the group. That's how we want to, encourage and save the returns for shareholders in the future. It's not from the trading, but it's from the added value food production. And what we did in the last few years, we invested in 150 million euros, and that's how we support our growth story. We do both. We do organic, but we also are a serial acquirer. So we acquire companies, both locally, but we also look outside the Baltics. So in 2010, we did an IPO, and 2013 was our first step into food production. Since then, we did around 6 acquisitions or 1 acquisition per year, each bringing value to the group and its shareholders, as you saw the stock price. So we are a growth story and a growth stock. However, apart, from what I showed you, what we do and how much we could be undervalued, we try to diversify and put effort to pay back for the shareholders as well. So we have a dividend policy of 20%. That's of course minimum, but we try to balance our investments and pay back from the shareholders. So 20% since 3 years ago, we're following that, and that's the benchmark for what to expect in the nearest future. If we see that we have less ideas for which generate more value for the shareholders, that of course might be revised. But that's how we balance returns and cash flow for shareholders and secure the growth in the future of Akola Group. Thank you very much. I think that was my last slide. Thank you. Anything else? Any questions?
Yeah, sure. This 20% dividend yield, did I get it right? And you mean yield? Or is it 20% of your profit?
Payout.
Payout is ratio from that profit.
Yes.
Okay, so it's not yield.
Yeah.
Okay.
Sorry, my mistake.
Okay.
Yeah.
And do you have plans for UK?
We have a company in Ukraine. It's completely asset-light. We have few people trading commodities there. We have some historical performance there and experience. I think we don't have specific plans now. It's hard to plan anything there. But I think if opportunities would arise, we're well positioned. Ukraine is a huge grain producer, and they always need to sell those grain in the international markets. I think we're well positioned in our solution.
Great. And one last question, and boring another question. I think the reason the target prices from Enlight as well is held back a bit, given this record year, is that you stuck by your long-term guidance. And question is it something concrete you see that they stick to this long-term guidance, which is lower than last year's result, or it's just to be conservative?
We are, and we try to be conservative, but I promise we will be faster in revising our guidance in the future. That, you know, if we see that we have positive momentum, we will deliver that to the market. It's first time we did it was last year. But more or less, you know, we're looking what's happening with the agri sector this season. We're looking what's happening, you know, in Europe in terms of economy, how we are growing, and especially how our investments, which we did a year ago, basically are performing. As soon as, you know, we will have more comfort, we will communicate that to the market for sure.
I have one question about this poultry business. You have bought in Lithuanian and Latvia poultry companies. Do you have made some changes with it? What kind of changes you have invested into these companies, which are what?
Yes, sorry, thank you. Yes, since buying Krakow and Latvia, we invested quite a lot. We renewed part of the production of slaughtering plant. Then, you know, we had some minor investment just to efficiency and ramp up. What we really have since acquiring Vilnius Paukštynas, we have, you know, synergies between teams and people and management. But the most important thing, you know, we are the biggest in the Baltic, so we basically have less competition locally, and we have strong production base for export. Because poultry is around 40 to 50% export, so only other part is sold here locally. Our primary market is Sweden. Sweden is a very good proximity to us. It's close and it's a premium market for poultry. They don't produce it themselves. So poultry is basically a good value-added business for us, and we are well positioned here in Lithuania and Latvia.
Great. Your book is the over story, man's relationship with trees.
Okay.
Thank you, Mažvydas. It is my pleasure to introduce our next speaker, Mr. Tomas, the CFO of the biggest LNG terminal in the Baltics. Please welcome.
I will do it. 1 second.
Thank you, Marcus. Thank you for coming to see us from Lithuania. We are a couple of companies, and actually, it's very funny and very. I'm proud that Mažvydas is my successor. I used to be 20 years CFO in the Akola Group. I'm very happy how they developed and increased the value. And the idea was like what to tell, you know, to investors regarding the state-owned company. And I believe that, you know, state-owned companies also could deliver interesting stories and good returns to the shareholders. And I would like to repeat the success story as Akola did with KN Energy. I have very lengthy presentation actually, and
Excuse me, Tomas, if you could hold the camera.
yeah, I have quite lengthy presentation, but I would like to focus maybe to give you a very helicopter view what we are doing and where we are, you know, actually standing and what is our could be success story, let's say. But this is not to sell the company, my message is to just, you know, to pay attention to the state-owned companies, and I'm very proud that actually I'm part of the state-owned company, spending for more than 30 years in private business, because it's different things, absolutely different things, with the ups and downs, pluses and minuses, but it's different on the different, let's say, level of the things that the state companies are doing, especially if the companies like KN Energy strategic enterprise. And as you see, we have 73% almost state company controlled by the state, and then the Hema, it's one of the biggest industrial groups in Lithuania, 10%, and our free float is very small. But despite of that, the shares of the KN Energy, I just looked on the computer, within the last 12 months increased by 43%. Of course, it's not easy to buy big amounts and to sell, but the growth was impressive, and that growth came primarily
from our, let's say, commercial activities. Very rough figures just for you to understand how the group looks like. Revenues is not very high, not billions, it's around 100 million euros EBITDAs, 50%, 50 million euros EBITDAs. This type of the industry is really very huge in percentage regarding the EBITDA because we have a lot, very huge asset base. Net profit, as you see, fluctuates from 13 to 15 million euros. And the company 3 years ago was in the minus because when the war started, all flow from Belarus has been banned, and the ports, all ports basically in the Baltic states lost a lot of, in that respect, a lot of income and revenues. So the same was with KN Energy. KN Energy basically business is divided in 3 business segments. One is the regulated activities, it accounts for almost 60% of revenues and profit, let's say. And the rest is commercial activities. This is the most important for us in the future, the business segment, and this is where we are believing our growth story. And we believe not only just to attract investors, but also to give the money back to the state, because if the company is state-owned sufficient and is example how the company could be managed, it's very big achievement, even more than the share price increase. And in commercial activity, we have liquid energy product business, and we have global energy. This activity is very stable, it's regulated. We are making very stable cash flows, and this is where, let's say, the company stands. From balance sheet, from credit worthiness, it's very secure business. As you know, we are operating LNG terminal. Lithuania was the first, actually, the country in Europe, which in 2014 built up that terminal. And actually, it is really very big success story of the country itself. Right now, the terminal serves all 3 Baltic countries. And the capacity of the terminal is 32 terawatt hours. And just for comparison, Lithuania consuming 17 terawatt hours of gas, Estonia around 5 terawatt hours, and Latvia 8, and Finland 14. So for Lithuania, it's very, very crucial was to have that independence in LNG business. So this terminal actually is and the ship in the Dragons is the best and well-known and historical vessel in the whole world fleet. Because no any vessel in the world, there are 47 vessels only, has that historical, let's say, value and history behind. The terminal is booked till 2032, so everything is sold. And actually, we can sleep, if I can say, use those words. So basically, everything is sold to 2032. So we are secured in our income, in our revenues, in our cash flow. And also, we have, as KN Energy, only one company in Lithuania has state guarantee for that, for the loans that has been taken for the terminal. So we have a state guarantee loan, and actually, from investors' perspective, I would say it's actually 0 risk. Commercial activities is the business that we are really counting on in the future, and liquid product terminals are, I would say, very stable business. We are controlling around 40% of Baltic oil shipment market share, 40%. If we take 3 Baltic countries, so Lithuania, of course, is the biggest in terms of the revenues. The second is Latvia, and then the third is Estonia. If we take total volumes that are loaded oil products via Baltic ports, let's say today, and compare what used to be 3 years ago, it's like 2 times lower figures. The reasons are very obvious. In our case, in KN case, our biggest client is Orlen, the biggest enterprise in the Baltics, and it accounts to 75% of all revenues. And we're basing our commercial, let's say, relationship on long-term basis. We have an agreements for 3-5 years with Orlen. What it means again, stable cash flow, revenues, and also ability to adapt to the changes or requirements of the client for various new, let's say, products which appears in the market like biofuels. Commercial activities activity where KN sells its brains, it sells its operational capacities, knowledge, and experience abroad. We are operating terminals, offshore terminals, LNG terminals in Latin America, Brazil. And also last year we won a contract for 4 state-owned Germany terminals. Germany has 5 state-owned terminals, and KN Energy won 4 of them for commercial and technical operations. Here we are getting purely selling our brains and experience and getting income for operating those terminals. So basically, this is our business, how it looks like. So 60% is very stable, and the 40% this is where basing our growth. Stability also and state ownership dictates us. It's a good and bad thing, how to look like, how much we need to pay the dividends. And so taking into account our net profit, we are very heavily paying dividends. And for instance, this is the dividend yield graph. And as you see last year, our yield was almost 8% dividend yield. And definitely the companies like state-owned companies, and KN is not exemption, the dividends, we have very big pressure to pay dividends. So for the shareholders, I can assure you dividends will be paid always, every year. Only the question, what will be the yield and what is the amount? Of course, the company would like to pay slightly less than we have a government requirement because of our future investments, and we will see. But the yield will be no less than I would say, I will predict no less than 4 or 4.5%. Actually, many things like ESG and etc. I will skip off, but this is the things that's most important. I will go to the last slide. The new energy business. This is it's here. New energy business is a new niche business for us. It's like startup business, apart the businesses that I have mentioned. And it mostly relates to the solutions for various new energy products, logistics, like hydrogen logistics or CCS logistics, carbon capture solutions. Currently, KN is very heavily involved in the CS project. Actually, there are many projects in Europe, and only one has had already FID, it's in Norway. KN right now is very proactive in a CSS project. And we have a partnership with the names you are listed. And we are trying to find a solution, business-wise solution, economical-wise solution, to create that CCS capture alive and economically wise. Right now we are in a consortium and we are in the second stage of feasibility study. And we are planning to finish that feasibility study next year. And if that feasibility study will be economically wise, then we will proceed further and we will have, I really believe we will have a positive, let's say positive results and positive project implemented, maybe the second in Europe regarding carbon capture. So this is like the future for carbon capture business. As we know, the whole big producers, emitters like chemical companies, energy companies, cement producers, they need to solve somehow their risk or their exposure to the carbon emissions. And CCS is one of the most promising, let's say, solutions and most economically viable ones. And here we count a lot on that success, and here let's see the state-owned company puts big efforts into commercial activity like CCS capture and other, let's say, alternative energy projects. So basically, this is it. Very rough and very short. Thank you.
What 22, you mentioned that you paid dividend over time, but there was no dividends in 21, 22.
We had we need to write down our, let's say, terminal because of impairment, as we lost the huge quantity, so it's like financial impairment that's been written down.
So in the future, there is no such a.
No.
Right, so one question, you have some 40+ million in cash and also in reserves. And if a really irresponsible politician wanted money, they could force you to pay out this whole thing.
So basically, yes, we have 40 to 55 million in cash, and we have 45 million in reserves. And actually, yes, this is the threat for the company. You know, if they will decide to pay out dividends, this is the shareholders' decision. But the shareholders, which will have the shares, they will get very big, dividend payments at that time. But of course, this is not intention for the company, and sometimes it's not doable things. Like everybody wanted to wish that we need to have also the economical reality, because we need to build the growth and the future income. If you pay out everything, so we will be lost without money and future investments. But the company, yes, it has huge amount of the cash, and that cash is, let's say, secured, stored for our investments and for our, which I have not mentioned, also projects towards venture acquisition in oil operating terminals, or in Latin America, or in Vietnam and Indonesia. So this is the looking for major acquisition projects in those regions. Because those regions, Latin America, apart from Africa and Asia, are the most growing in the world regarding LNG business. Europe is already done actually this happening here, but we have North America.
Great, just saving some time, the market cap is around 100 million. So, great, thank you, Thomas. Your book is assessed.
Thank you. Thank you.
So, yeah, now I will actually hand over the moderating to the CEO of Orion, Paulius Saraskas.
Thank you, Matthias. So, I talked to Matthias, pleased to be here, and I must say I'm so impressed, and I know how hard it was for you to fill such a big room in Tallinn, where the stage is dominated by cherry equity salesmen from Lithuania. I represent Orion Securities, the largest non-banking investment firm in Lithuania, and also I present myself as a cherry bond salesman. I've been doing bond sales for over 20 years. True gentlemen choose bonds. Equities are for cowboy, but I look at it from other perspective. I buy Artea Bankas shares because I need, and I buy bonds, AEI bonds, because I want it. Proud to present and introduce Mantas Jacikevičius. He's representing top asset manager from Lithuania, Latvia Asset Management, which manages 1.3 billion AUM. And in short, the story of AEI is 5 years ago, it was just a nice idea on paper. And since then, these guys have been able to achieve quite impressive things. We have been raising 100 million euro equity in a regulated fund vehicle. And along the way, we have raised a 91 million euro bond. And actually very successfully deployed in green renewable assets across the region. Why we are here, of coincidence, not only because Matthias is running a show, but we're also here to pre-market the transaction, and pretty soon we'll be in a public bond market to do a liability management exercise for AEI. So, Mantas, what are those?
Yeah.
You need to know.
Yeah.
Navigate that.
Thank you, Boris. My name is Bankas, the fund manager of the renewable energy investment vehicles and Lord Asset Management. So for those who don't know, Lord Silvano Asset Management is a well-established pan-Baltic asset manager. Was established in 2008. Lords primarily at the beginning focused on real estate investments across the Baltics and Poland. But since then, we have expanded quite significantly in terms of number of investment vehicles managed, size, and as well as strategies. So in 2016, we played with the idea of investing into renewable energy because we saw that market was growing and there were many overlays between renewable energy and real estate investments. So in 2016, we bought our first pilot project in Lithuania, 2.6 megawatt solar PV portfolio, just to basically understand how the business and economics work. And in 2018, we made a significant leap and invested into our first solar portfolio in Poland. So it was a 66 megawatt solar portfolio. And with a strategy that basically we just bought a project with a building permit in place. And our idea was to construct it in 2 years and then divest it once the project is operational. So when we entered the market in 2018 and bought the project and entered into the construction, basically, even though there were like subsidies for those projects in Poland, none of the local banks financed them because basically they did not understand how they work. And they placed a lot of risk on the government-backed subsidy schemes. But yeah, we managed that issue. We bought a private debt fund on board to finance the construction of the portfolio, after which we refinanced using long-term senior financing. But this was basically our first big project in terms of our renewable energy strategy. And everything came together in 2020 when we established our first renewable energy investment vehicle, basically a 5-year investment fund of 100 million euros with a strategy to invest into renewable energy projects across the Baltics and Poland. We specifically invested in solar and wind projects. During the first years of the fund operations, we raised close to 100 million euros of equity. And as well, as Paulius mentioned, topped it off with 91 million euros of green bonds, which were raised from investors in the local markets. So basically using around 180, 190 million euros of capital, we deployed it into our regional markets. And we built one of the largest renewable energy project platforms in the region. Our flagship projects, our primary flagship project is a 185 megawatt operating wind farm in Lithuania, which we own with a large Finnish asset manager, Varenbergas. In Poland, we have successfully constructed and are near finalizing the construction of 250 megawatts of solar under 3 separate portfolios. And as well, we have around 1.5 gigawatts of development in the regional markets. So basically, we have one of the largest renewable energy platforms in the region. And what our fund strategy, since it's coming towards its end of its life cycle, we have another 2 years of operations. We're basically selling. So just for you to understand our strategy in terms of renewable energy investments is to acquire equity capital, top with junior bonds on the fund level. Then we invest in projects at ready-to-build stage, meaning projects who have building permits in place. We construct those projects and we exit after COD anywhere from 1 to 2 to 3 years after the project is operational. So this is basically our business model. Since we have this large platform in place, you can not only divest assets separately, but you can sell the whole thing as a platform to a large large foreign institutional player. And this is currently the case of one of the potential exit options for the fund. Of course, those 5 years, looking at our history, were not without bumps and many issues. As probably as you know, during 2 years ago, basically we're coming off of an energy price crisis, which I guess from our perspective had both positive and negative effect. And the negative effect is that everything became really expensive to construct. For example, if you wanted to buy solar modules from China, the supply chain risk that materialized and the lower production levels that were needed it resulted in long periods of equipment delivery, as well as the construction itself were really high compared to the historical levels. One of the, let's say, I guess, bigger issues that we faced as well, that during the construction of one of the wind parks in Lithuania, one of the wind turbine collapsed during construction. So again, this is probably one of the risks that you did not think when you are constructing the project. But yeah, it's last 5 years there were really bumpy, but really interesting as well. So at the moment, as I mentioned, we have a large platform of renewable energy projects. We have 3 projects that are already generating positive EBITDA. So our flagship project, Varenbergas and Estonian, of the 185 megawatt wind farm in Lithuania, and it's already generating positive EBITDA around 25 million euros per year. Our solar assets in Poland are coming to production and as well are generating positive EBITDA at the beginning of this year, and the portfolio will reach its full capacity next year. So basically, yeah, we built one of the largest renewable energy platforms in the market. We have sufficient operating capacity, serving the debt, serving the bond, and as well with the fund strategy, we're looking to close the fund, sell all the assets, and return the target returns to our investors. So yeah, that's basically it. And in terms of bonds, so maybe Paulius, you want to jump in? Just yeah, present our pitch on the debt side.
Essentially, I think this is just the head of message. If you are staying up with this, just the attention will come. Will come in the public legal format, will come available to both investor community in small denominations and so on. I think it was a good introduction towards what we as management company and what we are doing on green investment side. Thank you for taking your time.
If you have questions, then you'll get your book. And actually, they didn't have the first choice for your chef.
It's about the tree, yeah.
It's also about the trees.
Yeah,
Yeah.
Thank you.
So that's it. Again, thank you very much for coming. And now we have wine and snacks. So the night is just starting, I hope.